Welcome back, guys and gals. Greg Silverman here, Outsourced Chief Investment Officer and your Outsourced Chief Financial Officer. We have a pretty big social media footprint, which is nice, and we put out a number of curated articles, which is great, stuff that interests us in our research department. And we see what percolates to the top, what gets the most shares, likes, etc. And then we do a come learn with me session just to read through some of those articles. Here's one that hit the top of the hit parade last week. Global M&A braces for dry spell as boardroom puts expansion on hold. Okay, that's no surprise. The surprise to me is that it came out 6 months after the market started falling. Second quarter M&A down 25.5% amid recession fears. Interest rate hikes drive US deal making down 40%. Asia Pacific stocks seeing 10%, Europe up 6%, large buyouts. Oh, interesting. Financing drought, valuation mismatch, key hurdles. All right. Let's dive in under the covers, as it were. London, New York, June 24th. Global deal making is entering an arid season as raging inflation and the stock market rout curb the appetite of many corporate boards to expand through acquisitions. Russia's invasion of Ukraine in February and fear that economic recession is looming dealt a blow to M&A activity in the second quarter. The value of announced deals dropped 25.5% year on year to $1 trillion, according to Deal Logic data. Companies are standing back from M&A in the short term as they are more focused on the impact of a recession on their business. The timing for deal making will come, but I don't think it's quite there yet, said Alison Harding Jones, Citigroup. M&A activity in the United States plunged 40% to $456 billion in the second quarter, while Asia Pacific was down 10%, Deal Logic data showed. Europe was the only region where deal making didn't crash. Activity was up 6.5% in the quarter, largely driven by a frenzy of private equity deals, including a 58 billion euro take-private bid by the Benetton family and US buyout fund Blackstone for Italian infrastructure group Atlantia. Proceeds from global listings were down 84% to 33 billion in the second quarter, according to Deal Logic, with only 274 companies attempting to raise cash via an initial public offering, compared to 852 in the same quarter last year. We are nervous about the back half of the year, but transactions are still happening, said Mark Shafir, global co-head of M&A at Citigroup. The largest deal of the quarter was Broadcom Inc.'s $61 billion cash and stock buyout of VMware in the United States. Others included Lund's proposed acquisition of Twitter for $44 billion, which has now been, put on hold or he's pulled out, and a move by India's largest private lender, HDFC Bank, to buy out its biggest shareholder in a $40 billion deal to create a financial services titan to tap rising demand for credit. Not just private lender, that's one to put on the watch list, I think, HDFC Bank. India is one of our themes. If you want to know some of our investment themes, be sure to take a look at the links that are posted below this video. You'll see some links to some mini groups or mini investment themes that we follow and that we provide services in and invest in. So take a look. India is an area that is of interest to us long term. With stock markets facing persistent turmoil, boardrooms are wary of making expensive bets. We are unlikely to see a large number of mega deals and buyouts getting done over the next couple of quarters. M&A is hard to do when companies are trading at 52-week low, said Mark Cooper, chief executive of US advisory firm Solomon Partners. Cross-border transaction volume dropped 25.5% in the first 6 months of the year. A traditional flurry of US investments in Europe did not occur in the wake of the Russia-Ukraine conflict. Philip Morris's International Inc.'s PMN $16 billion bid for smaller rival Swedish Match was the only notable cross-border exception in a quarter dominated by domestic deal making. When you think about the psychology of executives and their level of confidence to make a leap across borders, you need to take into account the level of uncertainty in the world and how that impacts things, says Andre Kelleners. Where'd you go, Andre? Here we go. Said Andre Kelleners, head of EMEA M&A at Goldman Sachs Group. For an interactive version of Reuters, blah, 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 debt conundrum. Acquisition financing has become more expensive for companies as central banks have hiked interest rates to fight inflation. Even those that have the cash to undertake a deal or are using their shares as currency find it hard to agree on price in choppy markets. Stock market volatility is a big headwind to strategic M&A. When you have stock market volatility, it's tough to have value conversations and make it hard to use it as stock as currency, said Damien Zube, co-head of US corporate practice and M&A at Freshfields Brockhaus Derringer. In Europe, sharp falls in the value of the euro and the pound make companies vulnerable to opportunistic overtures by private equity investors. Buyout funds have been a major driver of global deal-making, generating transactions worth $674 billion so far this year. Market dislocations offer a window of opportunity to private equity funds as valuations are coming down, said Umberto Giacometti, co-head of Nomura's EMEA financial sponsor group. There is a lot of screening work underway on listed companies for both take-private deals and stake acquisitions in public companies. But without a price adjustment, activity cannot properly resume. He predicted the average size of private equity deals would shrink as banks close the taps on financing and private credit funds become wary of signing big checks. Going forward, deal makers expect cross-border transactions between the United States and Europe to pick up eventually on the back of a strong dollar and a widening gap between the valuation of US and European companies. With a slightly elevated level of visibility than what we had earlier this year, would expect capital flows to resume and deal activity to pick up, including on the financing side, said Goldman's Kellen's. But caution prevails as companies are still trying to sever their ties with Russia or limit their exposure to the region. Clients are increasingly looking inward rather than outward. Okay, not a surprising shock, that article. Does surprise me a little bit about how long it's taken to percolate through. Be that as it may, guys, take a look at some of the links below. As I mentioned before, we offer outsourced CFO and outsourced CIO, Chief Investment Officer and Chief Financial Officer services. Take a look at some of the links below and some of our other videos. Like and share. Greg Silverman out for now.